What is going on, everybody? This is S Trades, and this is day 19 of the bootcamp. And in this video, we'll be going over daily bias and how to find it, how to kind of go on about your day, seeing where the candles are going to go and things like that. And so, without further ado, let's get straight into the video. So, to identify the daily bias, just in simple terms, right, is pretty much you're trying to predict or you're trying to see like where is the daily candle going to go, right? So, let's say you're trading on a Monday or a Tuesday, you're just pretty much trying to find out where is this day going to be heading to, right? So are you bullish on the day? Are you bearish on the day, right? Do you think we're going to be, having a lot of bullish plays happening? Do you think we're going to be getting bearish plays happening? You know what I'm saying? So pretty much that is kind of how you find your daily bias. And the reason why people find daily bias is just to see and kind of help to guide you towards a certain direction for the trades, right? You don't want to be just randomly placing longs and shorts all at the same time and then being all over the place, not really knowing where the trades are going, where the price wants to seek, right? So now before I start, there's two things, right? There's drawn liquidity and there's daily bias, right? Daily bias is just kind of the overall image, right? Think of it as like the bigger picture for the day, right? Just kind of seeing where do you think the full-on day is heading to, like are we bullish or are we bearish on the day, right? Drawn liquidity, however, that is more detailed on like not certainly on the lower time frame, but it's kind of just showing you the target points of where price actually can go to and why, right? So the daily bias and drawn liquidity are very, very similar to each other. They could kind of go hand in hand to each other, but I wanted to just split them into two different videos because it would be way too much information just for one video, because daily bias is one thing and then I would have to go a lot more in detail for drawn liquidity because there's a lot of things that go into drawn liquidity, and the thing is they kind of go along with each other, right? So some of the concepts I'll be talking about today, you're gonna see them again in drawn liquidity video that I'll post up next, and the same thing, the things that I talk about in the drawn liquidity video, you're gonna also be seeing here because the concepts are pretty much going hand in hand together, right? So anyways, so how do you find that daily bias, right? So the first thing that you would do in the morning, right, this is just a daily chart, right, just the bullish trend I've been having, right, you would pretty much go and hop on the 4-hour, daily, and the weekly, right, just to kind of see where you are. So there's different things that go into finding daily bias, right? First is the concept that I taught you guys earlier, internal range liquidity to internal range liquidity and vice versa, right? The Fibonacci retracements, right? Premium and discount, fair value gaps, and liquidity, right? All of these things are kind of what make up make up daily bias and drawn liquidity, right? So you're going to be kind of using all of those concepts together, right? So taking a quick look at this chart, right, where do you think we're going to be going, right? Just a quick overall visual, right? In my opinion, we're going to probably go up higher, right? Now you might ask yourself how and why do you think so, right? First of all, what I do is just you draw out your very obvious highs and lows, right? Your liquidity levels, right? Then you can see we have obvious high right here, an obvious high right here, right? And then we have a very obvious low over here, right? And then now you just identify some of the fair value gaps in this leg, right? So I'll just go ahead. This is the highest time frame, right? This is a daily fair value gap right here, and this is another daily fair value gap right here, right? And right after I drew that, what I also do is I pretty much draw out previous day's highs and lows, right? Just pretty much go on the daily time frame, right? Just draw out your previous day high and the previous day low, right? And we could also see that there's more lows over here, right? This is previous, like 2 days before's low and the third day before, right? So just by taking a quick look at this chart, right, what can you tell, right? So first of all, right, we open up, right, this day and we immediately displace and manipulate lower, right? We come down to this daily fair value gap, we sweep out previous day low and previous like 2 days low and the third day low, right? So we sweep out all those levels and we start to get an immediate reaction, right? So what happened in this area, right? We pretty much rebalanced to the internal range liquidity, right, which is this daily fair value gap, right? And we took out the previous day low and previous few days lows, right? And now we were starting to respect this daily fair value gap, right? So where are you expecting price to head then later, right? In my opinion, now we're very bullish, right? And just taking a quick look at what happened before, right? This was happening during the tariffs, right? So if you're keeping an eye on the fundamentals, this could also help you out a little bit. So in this case, we had a lot of tariff good news happening, right? Trump lowering the tariffs, and then this is why you got this big, massive candle. And then we retrace back down lower, right? And also, another very helpful tool is using the Fibonacci, right, like I used before. So if I just draw out the fib level from here to here, we see that price rebalanced fully to 0.618 level, and then now we're starting to see a reaction higher, right? So I'm still expecting price to keep on continuing higher, right? And again, taking a quick look at this high, right, again, looking at previous videos that I talked about, internal range liquidity to external range liquidity and vice versa. So in this case, right, we took out this external range liquidity right over here, and then now we rebalanced back down to the internal range liquidity, right, which is what we broke the structure, right? So in this case, once we broke that high, right, very important high, then we start to kind of anticipate some sort of a pullback either to this or this daily fair value gap, right? We ended up pulling back to this one, and then I'm expecting the day to be bullish just by seeing the candles reactions, right? So if you just go on a lower time frame now, for example on the 4 and the 1 hour, so now coming down to the lower time frames, right, on the 4-hour chart, we see that price end up much manipulating lower to this daily fair value gap, taking out these lows, right? You could also see that if you go even on a lower time frame, right, don't mind the candles. This is because I'm on a contract. This is why they kind of look like this, but we see that this was a previous day's low and then another low that's taken out, pretty significant lows, right? So we have all this low resistance liquidity on a higher time frame, right, all got taken out, right? So and then we displaced down to this daily fair value gap. Now what do you start to expect, right? I'm expecting to see this draw get hit, right, and this London high get hit, right? These are the significant highs now, because now I'm leaning more towards a bullish sign. Well, not yet, right? In this particular case, you still want to see some sort of a reaction, right? So even if you're going like a lower time frame, just to see what's happening, right? So this is all pre-market, right? So if you just kind of take a look at what kind of a reaction we get after, right? So it opens up and we start to see an immediate reaction higher, right? So right here you see the 15-minute kind of ends up going higher, right? And now I'm kind of starting to see and expect price going up to these levels, right? And again, there's a few reasons why, right? Because we took out previous day low, previous few days lows, tapped into that daily fair value gap, right? And we could also draw out a fib, right here from this range, from this high to this low, right? And we see that price end up coming down, rebalance into equilibrium. So now we have multiple things coinciding together, right? We have equilibrium, we have daily fair value gap, right? We have previous day's lows, right? And now my daily bias for the day is bullish, because now I'm starting to see a reaction off of all of these confluences, right? Now expecting to see these prices get taken out. And if we just see what happens later, right, we come back, right, we're here over somewhere over here, you could see that we also get another rebalance, right? This is potentially where you could have taken a trade, right? We rebalanced this 1 hour, right? So we rebalanced that 1 hour, and then now we kind of start to expect prices to go up higher even more if this gets respected. But as you guys can see, just by looking at this, the way this 1 hourly closed, I'm very, very positive, you know, my bullish bias. And now we see price ends up absolutely going right through both of the draws on liquidities that I marked out over here, right? So again, daily bias is pretty much that. Like, I kind of gave you a lot details, right? And you're not always going to see all of these things together all at the same time, right? Sometimes you might see 2 confluences, you might see 3, right? I just gave you a very good example on how to look for all of these things at the same time, right? Do not expect all of these things to be present in the market every single day, because you're not going to see that, right? But I'm just giving you a very good example in terms of kind of exactly what I look for, right? So you look for your previous days highs and lows, right? You look for your previous few days highs and lows, right? You see if price is inefficient, and meaning like it has to rebalance to equilibrium, right? So in this range was kind of inefficient, right? So we draw the fib, we see price rebalance to the equilibrium, right? It also coincided with the daily fair value gap that we drew over here. And then for the daily bias, if you start to see that your daily bias gets respected, meaning like, okay, now we start to see that the bullish side gets respected and the bearish gets disrespected. Again, that just pretty much means, for example, fair value gaps, like bearish fair value gaps getting inversed, bullish fair value gaps getting respected, right? This 4 hour ended up closing, and then I'm even expecting for this high to get taken out, right? If you just take a look at it, right, we kind of slowly creep up, we take out that high, right? And yeah, pretty much the bias played in perfectly. So okay, taking a quick look at the next day, right? What do we see here now? We go on a daily time frame again, mark out our daily high, daily low, right? So now putting again the other concepts together, right, we ended up respecting the bullish PD rate in terms of this daily fair value gap, right, and then the Fibonacci and everything that I mentioned just a little before. And now we took out this very significant high, right? So don't just expect your daily bias to skyrocket to all of these highs, right? Because this is 1,000 or like almost 1,000 points away, right? So it's pretty far. Don't freaking shoot for the skies and the moon or whatever, because, you know, it's not realistic. But in this case, right, once we took out this high, now we should expect some sort of a rebalance to another inefficiency, right? Because what happened again? It's internal range liquidity to external range liquidity, and etc. Right? So now we took out this external range liquidity, right? We took out this very prominent high. Now we should start to expect some sort of a pullback into some sort of an inefficiency, right? Now we also took out previous day high, right? And on the 4 hour, what do we see here, right? We took out that previous day high, right? And now we see that there's an inefficiency in this leg over here, right? This big 4 hour fair value gap, right? It's not necessarily now that I'm just straight up bearish, but now that we took out our very prominent high, I expect some sort of a pullback, because it's, you know, not realistic for us to just keep on going higher, you know, without any retraces, because now it took an external range liquidity. Now we should rebalance to some sort of internal range liquidity, which after seeing price take out that previous day high, I want to expect some sort of a manipulation, some sort of rebalance lower, right, to this inefficiency. It's not necessarily now that I'm fully bearish, but knowing that we just took out a very prominent high, I might be looking for some bearish plays in this case, because we have a very big inefficiency in this case, and we took out previous day high. And now let's see what happens, right? So for this day, we see that boom, price ended up coming down lower, right, to that inefficiency. So my bias played out correct, right? So we took out previous day high, very important high. We left off of a very good inefficiency level, right? It doesn't have to tap into, like, for example, equilibrium, right? If you just take a look at what happens a few hours later, we see that price ends up pushing up high, right? We don't rebalance to equilibrium. We don't have to do all the confluences that I said, but these are just very helpful tools to see if it, you know, ends up adding on to the confluences, right? And we start to see that the very next day, right, we inverse this big 1 hour fair value gap, and then, you know, we start to kind of expect and see again our bullish plays playing out, right? So if we see, boom, we took out that high, right, then what will happen? We have again another inefficiency. In this case, we came down lower, filled out that 4 hour fair value gap, right, so taking out the prominent high again, right? In this case, we rebalanced to the equilibrium, and now I'm kind of sort of expecting bullish plays, right, because we have all these confluences. Now I want to see some sort of a reaction back up high, right? Now I don't want to just completely speculate. I want to see some sort of a reaction. I want to see that the market is kind of confirming my bias. I don't want to force anything upon the market. So let's see what happens, right? We kind of just play around a little bit. New York opens, right? We kind of play around again. So you see that price ends up going higher, right? And this was our very obvious high for the day, right? But it doesn't, again, we have another inefficiency in this leg, right, that kind of could act as our drawn liquidity, but that's again for the next video. But just for the daily bias alone, right, our bullish bias played in, although we didn't hit our, you know, very obvious high, but we could have ended up catching up some longs, right? So in that case, some bullish plays could have been played out, right? And then we see price again kind of coming down a little lower, playing a little bit, you know, taking out that low, right? If you go on a high time frame, again back to the daily, right, I'm just kind of throwing a lot of examples for you guys so you have more things to look at, right? We have this previous day low that got taken, right? We left off this previous day high. We took these another very prominent low, right, and back to that daily fair value gap that was respected a few days ago, right? Remember that? And what happens after we take all of that? I might be expecting some sort of bullish plays back up, because now we manipulated again. We saw a manipulation leg, and we took out London lows over here. We took out previous day's highs, and now let's see what happens, right? We see immediate push up higher, and then these are very obvious highs for us to get taken, and kind of how I go on about, you know, the night before or in the morning, kind of just determine my bias for the day. And that's about it for this video. I will see you guys in the next one.